Hey there traders, Todd Gordon here. Welcome to the Trade Cave. This is Trading Nation. Guys, we're going to take a look at kind of the increased in volatility that we've seen. The Fed minutes all of a sudden put the possibility of the Fed winding down the balance sheet back on the table. We're seeing some challenges to the potential boost in the economy to fiscal policy. The monetary policy based on the Fed minutes is starting to act as a little bit of a headwind. So we're seeing some volatility in the markets. I actually want to look at the gold market, which could be moving up here. So let's go ahead and set up that trade. So here we are on the daily chart of GLD. This tracks, this is an ETF that tracks the gold futures. So I am going to look all the way back to 2012 here, and we're going to do a trend line just off the most significant peaks, in which you'll see is the market actually lines up quite well with the triple test trend line here, and it looks like we might be in for a fourth test on a little breakout up towards about the $123 to $125 mark in GLD. So as we move in here a little bit, zoom in on that trend line, it's going to intersect price right around, as I said, about the 123, 124 mark. And in the near term, you can see the market is banging up against short-term resistance just around the 120 mark. As I mentioned, there's a couple sources of volatility and concern out there in the markets. I think that's going to be enough to punch the market through that resistance to go up and test that long-term downtrend from 2012. If that trend line breaks, then there's a whole bigger set of issues. So let's go ahead and set up the trade. What we're going to do is we're going to sell a put spread rather than buy a call debit spread. The reason is this trade does hinge on this range at 120 breaking. So I'd rather sell puts below this support level here rather than pay for options, which would be either long calls or a call debit spread out of resistance. Reason being, if the market just continues to go sideways, we can collect some profit on that even without a breakout. If we do a long call op position or a long call debit spread, we have to get the break in order to make money. So let's sell puts just below the market about 119. So let's head over. We have the trade set up in the May weeklies. These are the options that expire in the first week in May, which expire May 5th. We're going to go ahead and sell that $119 put, buy the 117. Altogether, we're going to take in 75 cents or $75 per option spread, which gives us a max risk of about $125. So remember, we have a little bit more risk than we do reward, but keep in mind, we just need the market to go sideways, up, or even slightly down, and you can still make money in this trade. That's the reason that the credit spread will give us kind of a skewed reward to risk ratio. So let's put the trade to work. View trade, and that is now working. All right, guys, so let's go ahead and put a stop loss on this as well. If the credit that we take in gets cut in half, so the 75-cent credit gets cut down to 35 cents in terms of what we make, let's use that 50% give back rule and let's exit the trade. Otherwise, let's look for a break through that 120. So that's the trade in GLD. Be sure to use those stops, and it will be volatile because this is kind of be a binary event if you have it on before a data point like non-farm payroll. So be sure to position size accordingly, which if the market makes a big move against you, off market hours, the loss that you might take won't be too significant. So just be sure to position size appropriately. All right, guys, for CNBC's Trading Nation, I'm Todd Gordon. Good luck on that trade. Be sure to follow us at Trading Nation on Twitter for updates to this trade as well as all the other ones. Our traders are working. We'll see you guys in the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.